Bursa Malaysia's thriving IPO market is capturing the attention of companies in Hong Kong and Singapore that are exploring listing opportunities here. The Edge's senior writer Cheryl Poo, whose piece on this development was featured in the Edge Malaysia Weekly, shares some insights.
IPO scene on Bursa has been very vibrant in the last few years. Ever since the pandemic, there was already it was already growing even before that, but the stay-at-home situation led to a lot of a huge influx of retail investors in Bursa, and this has led to a very interesting development. And Bursa, in fact, last year had a record number of 55 IPOs, and that's put Malaysia ahead of other countries in ASEAN. So this has been an interesting development, seeing the likes of Hong Kong listed companies as well as Singapore listed companies eyeing a secondary listing on Bursa. This is actually the first time that a Hong Kong listed company has voiced its intentions to do so. And what's more interesting is that there is actually a ready pipeline of Hong Kong listed companies that are aiming to put in its submission as early as next year. So they're actually internally making internal preparations to do so.
Among the companies eyeing a listing on the local stock exchange are Hong Kong's energy services firm Unity Group Holdings International and Singapore Exchange-listed chip firms Grand Venture Technology and UMS Holdings. Poo explains the local bourse's listing requirements and the motivation behind secondary listings here.
The criteria for companies from overseas that are already listed, they're quite straightforward. As long as they are already listed on the main board of their own market, they can. Our regulators it should be quite a straightforward process for these companies. But we've heard from deal makers that the reason why Hong Kong listed companies are eyeing our local market, that's because for one, the listing requirements are very expensive back in Hong Kong. Comes up to about 20 million Hong Kong for one listing and annual fees of about 3 to 5 million. So Bursa is a less expensive alternative. And secondly, it appears that liquidity on the capital market in Hong Kong is flowing towards the higher cap companies, and a lot of these smaller cap ones are largely overlooked.
The growing interest in Bursa IPOs comes as Malaysia topped 5 neighbours, Indonesia, the Philippines, Singapore, Thailand and Vietnam, as the only country that saw an increase in IPOs in 2024 from 2023. This year, the momentum is expected to accelerate.
Deal makers have pointed out that many companies, there are many more SMEs that are eyeing a listing. There are a lot of inquiries. Internally, process has been made in the past few years. Actually, it's been leading up to a higher IPO target of 60 IPOs this year, and people who are in the industry are very confident that this can be met, and not just met, surpassed actually.
Bursa is also expected to see more listings by Sabahan firms, spurred by the recent successful IPOs of local counterparts.
Last year, there was a Sabahan company, KTI, that's a local property developer that got listed, and that was the first Sabahan company that had been listed in the last, I think about 10 years or around that time, and that's been an interesting development for the East Malaysian market. And shortly after that, there were a few more companies. There was Life Water, which is a bottled water manufacturer, as well as another one, Azam Jaya. So we've seen a number of these happening, and there's a lot of inquiries as well from local other SMEs in Sabah. So that's another interesting development.